Welcome traders to another Tick Mill trading update with me, Patrick Munnelly. Want to update the S&P 500 view using the emini futures contract and put together a trading session ahead. Before we jump into the charts, on the macro side of things, the sell-off we saw yesterday was prompted by poor reception for the bond auction that we saw later in the session. Today we have the 30-year coming out again late in the UK session. So it's 7 o'clock Central European time, and then we have Fed's Barkin speaking at 9 o'clock Central European time. So a little bit of risk there as we head into the back end of the day to be cognizant of on the macro side of things, and obviously we still have geopolitical tensions on the horizon as well with respect to Iran and Israel. So from a technical perspective, weekly charts, we continue to grind lower here. We now have the weekly volume weighted average price and the value area high at the 54.53 as the key resistance to pay attention to. If we can get up there, I doubt we're going to see that given the current structural setup. On the daily time frame, we were rejected from that weekly range resistance 53.57. We filled the gap at 53.58 yesterday and sold off. And so it's really going to be the big question now is, can we put in a higher low into the back end of the week here? If we can't, then that's going to be pretty pretty instructive as to where we're heading, and certainly we're thinking about this 5,000 level as being the next principal downside objective if we don't put in this higher low. Moving to the intraday setup. So this is my current positions as per yesterday's plan. We traded up into the resistance zone, the bull bear zone, and I had the daily setup here into that 53. 45, 53, 55. So when we got rejected from there yesterday, I got in on the short side. So I'm currently holding risk-free shorts from that 53 area. I'm going to trail down the stops. In terms of today's bull bear zone for me, we want to take a look here at the 52.60 to 52.70 area is going to be key. If we actually, I'm going to just adjust that slightly. 52.65 is what I'm looking at to the 52.75. Unless we can get through there, then I think the pressure remains to the downside. We did, as I anticipated yesterday when we sold off, we did test and hold the 51.90, the 5200 area. We're consolidating there at the moment. Price actually to me looks weak for now. And so in terms of today's scenarios, let me get rid of this drawing here. And this one here, and so I'm going to be paying attention to whether or not we can hold the lows. We have some liquidity building at the 51.75 area. So we're going to be looking at support 51.65 to 51.75. If we test into here and we get bullish reversal patterns, then there is that potential that we put in a higher low here. And if so, we will look for a test of the bull bear zone from the low. If on any pullback that we get intraday, if we hold the 52.30s then as support, then we can start to think about a move higher coming out of that. But if we fail to hold this 51.60 to 51.65, 51.75 area, then the path of least resistance is going to be a move lower to retest the lows of the week into that 51.19. And I would anticipate we'd probably undercut those. And then it's going to be a question as to whether or not buyers step in again into that 5100 level. If they don't, then we're going to be starting to think about the path down into the 50 sorry, the 5,000 level. So we'd anticipate that any move into the 50, 60 area might find some support there initially, but as then that 15,120 acts as resistance, we'd be looking for us to trade lower. So that's this is going to be the battle zone really today, whether or not we can hold this 51.75.65. If we can, then there's the potential that we put in a secondary low, and what we would also get then would be an equidistant target to the upside. So we hold this area, then we can actually start to think about heading into next week a move up into the 5,400, 5,413 area. But it's really going to be dependent on whether or not we hold here. If we don't, then like I say, I think the path of least resistance is going to be lower, and we a weekly close this week below the 5300 would be a significant bearish development, and like I say, 5,000 will be the next stop to the downside. I will update the New York range expectations as we get closer to the open. But for now, like I say, I'm short the S&P. I'm long crude. That trade popped nicely overnight. I'm still holding Bitcoin. It's risk free, and the other one that I'm watching, the other market, and I'll do a video update shortly, is this dollar index again. I think we can start to think about that potentially moving higher if we if we can hold this 103 level heading into the back end of this week. But like I say, video update to follow. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.